Drew Moore from Advanced Trading. For over 40 years, we've helped the agricultural community weather the volatile markets caused by local, global, and seasonal events. Every day, our exclusive research team and experienced risk advisors share valuable insights and are sought out by the industry for perspective and market analysis. With over 30 offices in 11 different states, we're confident we will be able to assist you wherever you are located. You never stop working, and neither do we. Good morning. My name is Drew Moore, and I've got Brian Basting and Michael Reginelli here with me today, and we're going to discuss the December 9th USDA report. As of right now, we've got wheat down about 5 cents in the nearby March contract, and corn and soybeans are both up a few cents each in the nearby. So first question for you, Brian. What was the grains takeaway for corn and wheat today?
We've moved into the second quarter of the corn marketing year, Drew, and the USDA did acknowledge a very sluggish pace of corn export sales and shipments. They lowered the corn exports from the U.S. 75 million bushels and took the ending stocks up by a like amount. So you're looking at a carryout now, Drew, for 22-23 at about 1.26 billion bushels. Our bias at this point is that number has room to decline further in terms of exports, and they carry out to increase further because we're seeing some trends in the exports that are disconcerting. For example, today, USDA increased their export estimate for Ukraine by 2 million tons. So it looks like that the export corridor, the agreement was renewed, of course, last month, as the viewers know, and we're looking at competition then from Ukraine stretching into 23. And of course, Brazil is already shipping corn to China as we speak, Drew. So I think that export number still has room to decline. Key message I'd share with producers is that December 23 corn futures are trading near $6 a bushel, about $5.90. It's not too early to think about defending your balance sheet for next year in terms of looking at that price. It's a very attractive price, so just put that out there because this carryout feels like it's edging higher. On the wheat side, Drew, not a lot of changes there domestically in the U.S. No change to the carryout from what it was in November. We can touch a bit more on some items on the world balance sheet a bit later, but no major changes on the U.S. balance sheet for wheat this report, Drew.
Thank you, Brian, and certainly agree with your comment on corn and getting some protection on the books for 2023. Michael, over to you on the soy complex. What stood out to you over the takeaways today from the USDA report?
I wish there was more. Not very many. It was a pretty muted report. Trade was looking for carryout to bump up a little bit, 238 million. Brian and our research team here are slightly higher than that even for a number of reasons, but the USDA is kicking the ball down the road. So they left carryout unchanged at 220 million. Feels like they're going to wait for the January report when we can solidify supply numbers and then begin to kind of reshape demand from that point forward. So really outside of that, the only other things that stood out, soybean oil ending stocks were up a bit. There's a lot of oil share trade going on, unwinding on the soybean oil, soybean meal front, as you've seen soybean oil prices tank here over the past week. Right. Soybean meal prices scream higher. So we've seen some unwinding there, but those stocks up a little bit, maybe help solidify some of the bearish trend that we've seen established in soybean oil. On the world side, very little to report. World ending stocks up a little bit. They took Brazil's ending stocks up a touch, but then they reduced Argentina as well. So left production unchanged. Still some predominant thoughts that Brazil's production could creep higher as we approach harvest based on what we're seeing. But as of right now, the USDA has not acknowledged that.
Sure. Brian, question based off of Michael's quick comment there. Brazil, most analysts would assume that Brazil is going to be a record on the soybean side of the ledger here this year. Has kind of the arid and dry climate in Argentina offset some of that, or what are your thoughts here with what we know right now weather-wise?
There's no doubt there's a weather issue in Argentina at this point, Drew. It's been hot and dry for quite a long period of time amongst those key provinces. What I would remind your viewers, though, is two things. Number one, you hit the nail on the head. Brazil production is projected to be up 20% from last year. There are some who believe that may be a tad conservative. It could be even higher. So when you're looking at the combined output, for example, from Brazil, from Argentina, include Paraguay in that, you're looking at a substantial increase compared to a year ago. I did some quick math here. When you add those three together, production could be up over 1.3 billion bushels, Drew, with the production estimates now used by USDA. Now, if we start to creep that Argentina number down a few million tons, yes, it's still going to keep the market on edge. But the key point, Drew, is we have to see nearly a catastrophic decline in Argentina production if the Brazil crop is as large or near as large as what the USDA is saying. So what I remind the viewers is this, Drew. We're looking at November 2023 soybean futures near $14 a bushel. That's never happened before in mid-December. So just remind your viewers, it's not too early to think about 2023 production. I think that the rally we're seeing now is an opportunity to get some flexible marketing strategies in place. But I just remind the viewers that size of that Brazilian crop compared to last year, potential underlying word, and Michael made a good point. We're in the critical pod set and pod fill stage now, the next 30 to 45 days in Brazil. Stretch that into January in far southern Brazil. So it could still change, but if you believe that number is going to hold, it feels like it could be a tremendous increase in production in Brazil and in South America compared to a year ago.
Great. Thank you for that, Brian. Michael, over to barge freight. We've seen kind of a tick down in diesel prices. We've seen an uptick in water levels, and looking at the forecast, looks like there's more rain on the horizon for the Midwest. What does that do to barge freight, and thus what does that do to nearby corn and soybean spreads as we move forward?
Yeah, we have seen water levels beginning to improve, and I think the expectations are that should continue if the forecast comes to fruition. All that said, water levels are still very low currently. Really, it's going to come down to two things. It's going to come down to demand and logistics. And as of right now, we're struggling with demand a bit. If supply begins to catch up, then I think we could, then obviously we could see a little bit of, pressure come into the mix. But I mean, really right now, I think it does feel like with water levels improving, we could drift a little bit lower. We can't discount the idea that we'll see seasonal spikes if we get some ice in early to mid-January. That happens. That's something that we have to be aware of. But generally, it feels like the market's been fairly bearish Jan forward on bean demand up to this point. And and I think as of right now, we also haven't been able to benefit off of what we've recently been accustomed to that would be considered like routine corn demand either. Corn exports have been lagging as well. So some of the bean flashes that we saw this week are maybe creating a little bit of optimism that we'll have better filling in kind of that Jan window, maybe help with capacities at the Gulf. But as of right now, it does feel like it's just going to come down to, what's the demand curve going to look like and what's the logistical situation, and are we actually going to be able to execute? So there's a lot of uncertainty.
Sure. Thank you for that. That's quite helpful. Brian, for you, what's the wheat outlook like moving forward? What are your thoughts there? Argentina certainly has some dryness for their wheat. Looks like Australia, may have a record crop. Certainly the EU crop, specifically the French crop's off to a good start. Any thoughts there?
You really summarized it well in just a few sentences there, Drew. We're looking at an increase today in Australia wheat production to a record crop, and exports are projected right neck and neck with last year's record exports from Australia. The wild card in Australia, Drew, is the quality. We had quite a bit of rain across the eastern states in Australia back in October, November, and so as harvest continues in Australia and moves north to south, we'll see what the quality is. If it's feed quality, that's going to be more competition for the world corn export market, because that feed quality wheat will work its way into the export market and substitute, for example, for U.S. corn exports. So they may have a low milling quality wheat. We'll just have to wait and see. The Argentina crop was confirmed today by USDA to be 3 million tons lower, down to 12.5, and they did lower exports, drew 2.5 million tons from Argentina. Those numbers could creep lower on both fronts. They're only about 40% done with harvest, so that's an opportunity for a little bit of export business potential, underline the word potential, the second half of the crop year for HRW wheat, for example, which has been extremely anemic the first half of the year. A couple points though, Drew. They did increase the European Union exports by 1 million tons compared to last month. They also increased Russia's exports by 1 million tons compared to last month. And so we're looking at, and they also increased Ukraine's exports compared to last month. So when you look at the pie, if you will, Drew, of export competitors for wheat, they were actually 2.5 million tons higher. Again, combining all those exporters together, they offset that reduction in exports from Argentina. So bottom line, it's a fierce export competition right now for the U.S. and the world market. We'll just have to see how these next 6 months shake out. The export corridor, of course, in the Black Sea, still a big wild card, but right now, Drew, it feels like the wheat market is searching for demand on a weaker flat price. One option that could develop here, Drew, is the feed side. We're looking at under $1 a bushel spread between nearby wheat and nearby corn. Stretching into next July, Drew, that's now under $1.10 a bushel. With the increase in wheat that we expect it to be confirmed, increase in wheat plantings that we expect to be confirmed in January from the USDA in Eastern Corn Belt and the Southeast, there could be plenty of wheat available next summer as substitute for corn in the feed rations. So that's something to look ahead to. But for the time being, wheat is searching for demand.
Thank you, Brian. It's very good. Michael, last question for you before we finish up. Macro markets seem pretty shaky heading into 2023. Certainly talks of a recession. A lot of people assuming that the equity markets will be under water here coming into Q1 of next year. How does that all bode for commodities in your opinion?
Yeah, I mean, it's going to be, there's a lot of uncertainty there as well, unfortunately. One thing I guess we can say is, the US dollar has come down sharply off of the recent peaks. Now, it's still historically high, but as the dollar comes down, in theory, it makes U.S. commodities and U.S. raw materials more competitive for global buyers. So that would be a positive sign. The other thing is, if you look at the FAO Food Index, it peaked in March 22. We're down 15 or 16% from where that peaked. So we have seen values come down a little bit. Managed money has reduced exposure pretty considerably over the past 2 months in their net grains and oilseed positions as well. One of the challenge, and Brian hit it, is we have significant competition for demand from the supply side, and we also don't know, how mainland China specifically and others are going to, come out of and what their demand curve is going to look like as the recessions kind of take hold. So some of the large buyers and consumers in power economies are feeling the strain right now, and we need to establish some consistency on the demand front if we're going to continue to have really strong commodity performance, I think, into 2023. So that's certainly top of mind for us as we kind of look forward here.
Sure. Thank you very much for that. And thank you both for your time today. And with that, we're going to wrap up and have a very Merry Christmas and Happy New Year to everyone out there. Thank you.